Hello and welcome to lesson number 3 and video number 2, in which I will focus on the US dollar. Lesson 1 briefly covered gold's relationship with the US dollar. In this lesson, we will expand upon that by focusing on the gold-dollar relationship in the context of the other asset classes. First, let me remind you of the important conclusions from the first lesson. Gold leads the US dollar at key turning points, and as a result, gold against foreign currencies is a leading indicator for the gold price in dollars. Finally, gold may not be in a secular bull market if the US dollar is in a secular bull market, although this could be debunked over the coming years. In figure 3.3, we take another look at the US dollar index, but with the important context of the other asset classes. The two secular bear markets in U.S. stocks coincided with two secular bear markets in the U.S. dollar index and secular bulls in precious metals. Along the same lines, most of the secular bull in U.S. stocks from 1982 to 2000 coincided with a rising U.S. dollar, while the current secular bull in U.S. stocks has coincided with the same in the U.S. dollar. Furthermore, gold does not always respond too well to cyclical declines in the U.S. dollar index during secular bull markets in U.S. equities. The U.S. dollar index was cut in half from 1985 to 1992, its worst decline in history, and gold mustered only a cyclical bull market from 1985 to 1987. The dollar also declined sharply in 2017, but gold could not surpass its 2016 high. With gold on the cusp of breaking out to a new all-time high and U.S. stocks in the bond market likely to be in a secular bear market soon, one would think the U.S. dollar is eventually headed for a secular bear market. Gold against foreign currencies has been stronger than gold since 2016 and could be an early signal. That strength could be an early signal that the new secular bull market will be global and much less dependent on a weak U.S. dollar. In figure 3.4, we see that gold against foreign currencies, which we noted in lesson 1 as a consistent leading indicator for gold, is breaking away to new all-time highs. Note the blue box. Furthermore, unlike the 2016 to 2021 period, U.S. stocks in the bond market will no longer be a headwind to gold. Capital is and should continue to move out of those asset classes over the years ahead in favor of gold and precious metals. As a result, if it persists, U.S. dollar strength cannot derail the new secular bull market in gold. At the same time, the potential future bear market in the U.S. dollar may be more of a bug than a feature of the larger bull market in precious metals. That concludes lesson number 3. Thank you for watching. Next up is lesson number 4, in which I discuss what drives the silver price.